please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Well, wild, wild west, that's the only way to put it, what's been happening across the US markets. But global markets have been limping back to normalcy after 2 days of savage cuts. Will this recovery last, or are we in for a rougher ride in 2018? Jonathan Garner, the Chief Asia and Emerging Markets Equity Strategist at Morgan Stanley, joins us now on the phone line to give us his perspective. Jonathan, good morning. It's good speaking with you. I was just going through a recent note where you say that 2018 may begin well, but will end badly. It seems like a bad beginning for us. What's the sense you're getting here on?
Well, we had a very strong January. In fact, one of the strongest big starts to a year ever in global equities. But yes, in the first part of February, things have taken a turn for the worse. I think the problem is really that in terms of valuations for the non-financials part of the global equities universe, and particularly for tech, we were on extremely high valuations. We also have had earnings estimates in place generally, and in particular, I would say in, again, the growth sectors that are too high. And we had euphoric investor sentiment. In fact, third week of January, we had an all-time high inflow week to dedicated Asia EM equity funds. So that is now clearly undergoing a reappraisal. We've moved quite some way in terms of price, but broadly for the region, we've only now just returned to what we think is a reasonable base case target for the end of the year. So we don't think that this is a dip that needs to be bought aggressively.
Oh, okay. Jonathan, good morning, and thank you very much for joining us at what is a very crucial time for the markets. Do you think now that, or rather, what will you watch now? Do US yields start climbing up again? Will that be a spot of bother? What are the signposts that investors should look at?
Yes, we put out a quick note on this late yesterday around signposts. Firstly, as I just was mentioning, we need to see more clear blue sky upside to base case targets, so 5 to 10% upside as targets. We did achieve that for topics yesterday at the low, intraday low for topics. It was about 6% below our target, but the rest of the region didn't achieve that. And then I think we need to see a less weak US dollar, and we need the rise in US 10-year yields to slow down. I think that discount rate effect on the valuation of equities is one of the reasons why we had the correction. We also want to see some outflow period after this euphoric inflow. Typically, markets don't trough until you've had at least a couple of days of very large outflows. We haven't got the data for yesterday clearly yet, but on Monday, actually, there were still inflows ongoing, albeit less than before. And we also want to see those analyst earnings estimates come down somewhat, and that will take longest in terms of time, maybe 4 to 6 weeks before the analysts have moved their numbers to a more reasonable level. But as I said to you, I think this is it's quite a serious moment in markets. It's one that we were anticipating to some extent, and we want to be cautious here. I don't think that this is something that is a dip to buy straight away.
Okay, so if you're cautious, Jonathan, do you get a sense that this is just an interruption of a bull market, or could this be the possibility that it's a start of a bear market as well?
Well, our economists are still very sanguine about growth for this year, but that's largely been priced in. The question is really about growth in 2019, and some of the cycles and markets that typically lead an economic downturn, for example, things like the construction sector in China or the DRAM sector in Korea, they are starting to look somewhat more problematic. So I would just come back again to our base case targets for year end. We actually overshot them given how much the market had gone up in January. Overshot them significantly, and as things stand, there is still no upside essentially to our year end targets. So that's the view.
So, okay, you don't want the dip to be bought. You don't expect it to be bought. You think, therefore, Asian indices may grind lower? And what is your Nifty or Sensex target?
Yeah, in terms of the overall sort of story here, we think that, as I say, I don't know exactly how the path will move, but essentially there is zero upside. You're only going to make money on the dividend. So in terms of Sensex, 35,700 is around about 3-4% upside. Doesn't quite meet that criteria, having clear sort of blue sky, 5 to 10%. But India is a market that we are overweight. We're more inclined to buy India on a dip than, and in fact, parts of the China market than, for example, our key underweights like Korea or Indonesia or Australia, where there are much more fundamental problems around valuations or macro or sector composition. So, yeah, in terms of, within the Indian market, my colleague Ridham Desai is overweight consumer discretionary on strong consumer loan growth and also financials on declining credit costs. And we've also quite interested in the IT outsourcing names, technology outsourcing names that are under-owned and seems to be undervalued. So it's a sector that's been quite unloved compared to broader internet or tech hardware names in North Asia, but those Indian outsourcing software names are getting more interesting to us.
So when you said 35,700 on the Sensex, is that by the end of 2018?
Yes.
Fair enough. And you've also moderated your overweight on India. Is it also because other emerging markets may be looking a little more attractive now, or is it very India specific?
Well, India is, we reduced our overweight somewhat. So our overweights are Brazil, which was our big upgrade, which is the best performing market in the world year to date. That's a very specific story around growth acceleration and risk premium reduction. Then China, and then India in that order. So it's the lesser weighted of our overweights.
All right. Jonathan Garner, it's a pleasure speaking with you on what is going to be an interesting morning of trade. Thank you very much indeed for joining us. Now, that's very important caution coming in from the Morgan Stanley official that you don't necessarily have to go and buy the dip, but he's very positive on India. So here, upsides are expected.
Okay, well, that's the view coming in from the big market voice, Jonathan Garner. We'll keep getting you excerpts of that through the course of the day and the key takeaways as well. But let's talk trade now. Sudarshan Sukhani, Mitesh Thakkar and Prakash Gaba join in to give us their view of what could be expected today. Well, Sudarshan, you need to have a crystal ball these days to tell what's going to happen in the market. You know, such wild swings every day. But as a trader, Prakash was telling us yesterday was one of the best days to trade because of the, whiplash that we saw. What about you? How are you approaching this volatile market?
Yeah, good morning. And you're right. Yesterday's American markets were like a Hindi film. Yes. It had drama, tension, joy, sorrow. I mean, you name it, and we could find so much entertainment there. But unfortunately, entertaining markets are not bullish. That's the underlying theme. Bullish markets do not like volatility, and the kind of volatility that we saw tells us that the market underlying theme is no longer bullish. Now we can see short-term rallies even more from here. That's a different matter. But the trend is towards a lower Nifty in the next few weeks.
Oh.
So the trade is if you have, if you have short positions, and you should maintain those short positions, do not panic. But for today, the trade becomes very difficult. Are we going to rally from the gap up and go higher, or will we chop around here? That's a question I cannot answer. I can only say that in the near future, short positions for the positional trader should be maintained. For today, I think we could see a lot of choppiness, which we cannot anticipate before the open.
Okay. Well, first it was Jonathan Garner, and now it is you throwing cold water on our enthusiasm, because we were only looking at the Wall Street rebound and the Asian rebound. Sudarshan, what may be the contours then? I know you're not wanting to give a day trade perhaps, but is the roof, say, 10,650 or thereabouts?
No, the roof is so much higher. It's 10,900,
okay,
which really means that it's very difficult now to take a positional day trading view. And there's something else, Lata. Even though the markets fell 2 days badly, actually day traders could not have made money on the short side because the markets opened or gapped down and then went up throughout the day. It's better to have a positional view.
Okay, better to have a positional view. Well, there's a CNBC TV18 exclusive that's flashing for you on your screen. Max Financials is looking at raising 3,000 to 3,500 crores to fund an insurance buy, according to sources, and it's linked to the bid for IDBI Federal Insurance. Okay, interesting there.
Very interesting.
Yes,
Max was a seller, was selling its business up until recently. Now it's become a buyer, so that's very, very interesting. That I mean, look at all the stocks concerned. You should look at Federal as well, IDBI as well. IDBI in particular could do with sale of non-core assets. But Max Financial, very interesting if they're going to raise money.
Yeah, in 2 days, they have a board meeting on the 9th of February. So they could be taking that resolution then and there. And Max Financial and 3 other companies could make it to round 2 of the IDBI Federal bid process. So lots happening in the M&A space. But let's get Mitesh Thakkar and Prakash Gaba on board as well. Prakash, morning. After the good day that you had yesterday, what is the prognosis today?
Good morning, Sonia. Well, what I would say that on the highs around 11,169, there's a beautiful geometry. For the market to bounce, I need to see a good geometry at the lows as well. Is there a good geometry yesterday at 10,300? The answer is no. If the market slides down to 10,096, 97 zones, there's a good geometry out there. A bounce from there would be valid. Bounce from here is not valid. We could see rallies up here. Maybe rallies can go up to 10,724, can go even to 10,829. I would say that those rallies are shortable rallies. What we saw yesterday was a up move of 200 points from the lows, but that was an opportunistic short covering for the previous 7 days, because we've seen 900 points drop in 7 days. If it's like a rubber band that stretches. The stretching happens, unstretching also has to happen. So what we saw was an unstretching yesterday. So up move, I would doubt it. Well, the larger trend is still down. It will be a difficult day to trade today, where I have no idea how it's going to open, where it's going to open, whether it's going to open and go higher, or open and come lower. We'll find the trade there, definitely. And it'll be a volatile day. And making money would not be as difficult today as well.
Won't be difficult.
No, it will not be.
Well, we have some idea where the Nifty might open. I mean, it looks, the SGX is telling us it will open 100 points higher. So at that point, you still go ahead and buy? I mean, if it's a gap up of 100 points.
Because tomorrow, then, let's take it, weekly expiry. It might open higher, may go up slightly higher, but if it opens higher and cracks down, that also is a possibility.
Okay, so you don't buy the gap up, is what
I don't buy the gap up. I would like to buy the gap down.
Okay.
But
Mitesh,
then you are taking it up
sure,
for short covering.
Got it. Okay, Mitesh, good morning to you. Would you be a buyer on dips, or would you be a seller on rallies?
Good morning, Lata. See, one thing, we'll have possibly a V-shaped recovery without any base building. So in that sense, I would agree with Prakash and Sudarshan. I think very clearly the trend setup or the indicator setup is still negative, so I won't be really enthused about this 100-point gap up. I would be possibly a seller on this 120-point gap up. I'll tell you what levels I'm looking at on the upside. 10,700, 10,730, which is, I think Prakash just mentioned 10,725, I think was the level of falling gap on Monday. So that becomes an important pivot, and then 10,850 is a condition area of multiple moving averages. So closer to about 10,650 is an ideal level to start shorting, and short all the way possibly to about 10,720. So 70-point range upside on the shorting side, 100-point stop loss. I think we will, with choppiness of course, we will possibly revisit the lows of 10,330, 10,300 over the course of next few days. So my clear trade and bias is on the negative side. I think in fact today's opening, and if there's a mild fall of buying after that, around 10,650 is when I would suggest people to buy into put options. Okay,
let's start talking some stocks then. Sudarshan, yesterday a lot of rural focused NBFC stocks did well. From the large cap space, you like names like M&M, ITC, etc.?
Yes, because NBFCs will behave as the market does, and I have absolutely no idea how the markets will behave today. I think there will be a troubled day. That's a sense I get. M&M is a buying opportunity otherwise also. It's an outperformer, and among the commercial vehicles group, it is doing the best. So that's a buy for the day, and perhaps even you can carry it if it closes strong. ITC is building a base and coming out. I don't see a big rally in ITC, but for a short-term trader, ITC is an excellent opportunity. It's also withstanding the declines that the other stocks see on and off. And finally, I have Dish TV, which is bouncing from a low. This is a swing trading buy, a short-term buy. Don't make it a long-term investment. But it bounces and then it goes up to 80, 85, then finds a resistance there. So it's really in a trading range, and we are bouncing from the lows of that range. I have two short selling ideas again because the concept of the market is absolutely unclear to me today. The short selling is in Godfrey Phillips, which is in a sustained downtrend, and Chennai Petro, which broke lower levels yesterday even as the market was bouncing intraday. Okay. So it's a careful day today.
All right, point taken. Mitesh, your stocks?
So I have 2 sells and 3 buys, and while buys, I'm advising a couple of buys, but I think I would be quick to exit in case the Nifty starts failing to sustain about 10,650. JN indication has come down to very important support zones of 110, so buy with a stop below that, look for 120 as the target. NIT Tech is a buy. I think that's one stock which still remains in the medium to longer term to short term uptrend. I would buy this one with a stop at 814, look for a first target of 860, and Reliance Naval is now close to the earlier swing lows, strong support zones of 35 to about 3480, so keep a stop below that, look for targets of 39. Manage your trade as the market opens and look at the rates and look at the risk-reward equation on the stop loss and the target. 2 sell calls. Lupin, if it gets around 805, 810, I would sell with a stop at very tight stop at 822. Look for targets of 775. And Shree Cement, where the weekly charts are quite negative, I think close to about 16,850, 16,950 would be an excellent shorting zone. Keep a stop at 17,230 and look for a first target of 16,000.
Okay, and let's wind down this discussion with your picks, Prakash.
I have 2 longs and 2 shorts, Sonia. I'll go with Oil India. That looks good. We could see an up move here. The target on the upside would be 367. Stop below 343 should be fine. I like VIP Industries. Looks like a good base formation here. If the up move continues, we could see a move until 368, 370 zones. Stop up below 340. 2 shorting ideas. One is HCL Tech. Entire IT pack was looking a bit weakish yesterday. We can see a slide to levels closer to 930 zones, stop about 960, and finally a sell on Lupin. It's a breakdown structure, it's stretched. So if it goes down, 760 would be the target, stop up about 836.
Vikas Khemani, President and CEO, Edelweiss Securities, joins us from the sidelines of the Edelweiss India Conference 2018. Morning, Vikas, and thank you very much for finding time for us ahead of what's a very busy sked. Just tell us how markets might move. Are they weakened now, or was this a great buying opportunity?
Hi, Lata. I think it's been a very eventful February start, and last 3-4 days have been quite chaotic. But I think definitely lots of euphoria was there in which got built in the month of January, which will be, in my opinion, taken out and sanity will prevail in the market. So in my opinion, this correction has kind of brought things back to ground, and one would go to basics and start looking at, quality stocks, and stick to, fundamentals rather than, I think, more, moving away from those. And I do believe that, I think, while that momentum has kind of broken, but I don't think India momentum or India story or India, opportunity is lost. I think for many names, many quality names, this would be one of the greatest opportunity to kind of make an exposure. These kind of events comes once in a while, for all the technical reasons or market overbought reasons. So I'm not really overly worried about, any breakdown in the momentum of the market. Yes, it might slow down. Probably mood might shift from buying on dips to sell on rallies for some time, but I think that is part and parcel of the market. We have had a great 2017, 2018 anyway looks a little bit challenging from macro environment perspective. We have to keep that in mind. So I think that euphoria probably has been taken away, and I would expect that you will see a little bit more, sound approach in terms of dealing with the market, little bit more balanced approach in dealing with the market.
Okay, balanced approach is always a good thing. Vikas, hi, good morning. I know it's hard to catch the bottom of any market, but do you think that this buy call should be taken now, or can we see a few more days or maybe a month or two of weakness, and then it's better to deploy some money into the market?
So they're always very difficult to call out this kind of the market levels, because whenever it is, especially short-term liquidity driven or event driven rally, and especially when markets are overbought in a precarious situation, it's always very difficult how deep could it be. The only, probably comfort one can look at is that, from an earnings perspective, valuation perspective, where would markets find comfort? And my sense is that, given the fact that, Nifty EPS would be around 580 to 600 levels kind of range, anywhere 17, 18 times multiple, market should be reasonably okay. And that is where lots of comfort would come in, so that levels would be in and around 10,000 levels. So I think that is where, in my opinion, lots of people will start finding comfort, given the fact that we have earnings uptick happening, the broad basing of the earning happening, the sectors which did not participate in, earnings growth in last few years, you will start seeing participating. So I think this broad-based earning conviction, which is coming in my opinion, will provide some sort of downside protection to the market, and still a lot of money, especially domestic money, is waiting to come in the market, as and when correction happens. So I would assume that that would also provide some comfort to the downside.
You have a very interesting conference theme, India 2025, another tryst with destiny. And it was a great opening note, I read that. Therefore, what will you look for in the conference? You will look for 8-year, 7-year themes. What would they be?
So I think, Lata, whenever you are dealing with market investing, you have to keep a longer-term horizon in mind, because especially when these kind of short-term movements happen, only long-term perspective, long-term themes can stay. You convince the market, can stay you put in the market should the short-term volatility hit. So I think our approach always been that build longer-term perspective so that you can stay through the short-term, and also you can kind of take those kind of bets. And we think that over next 8 years, India is going through great economic phenomenon. We will double our GDP. We'll go to almost $5 trillion kind of GDP. We will have market cap of anywhere between $6 to $8 trillion by 2025, which means a lot of wealth will be created over the next 8 years. What we did in 70 years probably will do in next 8 years, and that's a big deal. In that sense, we are all part of, fortunate to be part of this period. India will see over 100 billion dollar plus market cap companies. Currently there is none. Maybe we will see over $10 billion market cap plus companies. So I think you will see huge change happening, and our idea in this conference is to build perspective, conviction around those opportunities, first of all at a macro level, and then break it down into what are the various themes one can look at, one can play at, and that has been the broad objective. And lots of companies who are coming in here, they have been guided to keep their conversation not only from a shorter term perspective, but keep a longer term perspective, that how are they seeing their industry, their companies and economy evolving.
Got it, Vikas. It's 2 minutes and 15 seconds for your conference to start, so we will not keep you. Thank you very much for joining us.